What's up, YouTube? It's your boy Black Market. Just wanted to get with you guys this Thursday night to review a stock. My guy Mr. Clark hit me up and he wanted to review a stock for him. So I told him I'd make a quick video review for him. So the stock I wanted to talk about is RIGL Pharmaceuticals. They are a healthcare stock. So they're in a good sector. Couple other things about the company. RIGL looks like they're a biotech company. Um, Biotech companies are pretty volatile, and you can probably see that on the chart. Um, but they're biotech company looks like they're located out of San Francisco, California. So I'll get into it and start reviewing this guy here. So right now I'm looking at the monthly chart. So you can see here I got a monthly chart up. Couple things I want to mention. I've got a 21 day EMA on here, a 200-day SMA. Then I've got my average volume chart or average volume charted, and then I've got an ATR. So going back to the 21-day moving average, essentially what this red line is the 21-day exponential moving average. Basically, all that means is this shows the average price of the stock over a 21-day period. And then the 21-day simple moving average is the moving average of the price of the stock over a 200-day period. So you can see here, really, new stock. The 200-day line hasn't even been fully created yet, and it's super volatile. You can see it started. We got a high of $114.75 and a low of $1.23. Right. So I mean, this thing's been all over the board. Um, Once again, I've got my volume average. The green bars is basically when you're buying the stock, right? It's going to show green or buying. The reds, the selling, and then this orange line here is basically the average volume. So if it gets above or below that orange line, then you know it's either above or below that average volume for the stock. And then the ATR is the average true range. So what this means is whatever time frame you're looking at. So we're looking at the monthly here. This is showing the average price movement of that stock per month. So you can see, it's got an average true range of approximately $1.28 per month, right? So if you're looking at the monthly chart here, really, there's really not much to go off of. I mean, it's not even above the 200-day, and the 200-day line is usually a good spot to either buy or sell a stock if it breaks above or below that. But there's really not a lot of information to go off the monthly chart. So I'd probably look here at the daily. Let's see if we can find some more info on the daily here. So you can see the daily is a little bit more compressed. There's a little bit more information on here. So if you look at recently on here, and I've actually got some bars kind of pre-marked. One thing you could do is if you wanted to trade this stock, is essentially use your 21-day line. And I always like to say the 21-day moving average is kind of like home base for the stock. Stocks are usually doing one of three things. They're usually moving away from the 21. They're usually moving back towards that 21, or they're usually moving sideways, right? So you can see here, away, it's moving. Sideways, it's moving. Or right here, they're moving back to it, right? So it's kind of home base for that stock. So you could, for instance, as of recently, so we're looking at January 29th here, you could have bought here, right when it closed above the 21-day, and then you could have sold right here, right when it closed below it. So you could have bought at 364 and then sold at 407, right? So not a ton of movement, but I mean, you're getting about a 40%, or I mean, a 40-cent gain per share on these. So you could have bought your shares and sold your shares there. That's one way you could have traded it, or there's another way that you could have done this too. Let me load the kilts and I'll explain what this is. The other thing you could have done is you could have traded this stock using the Keltner channels. And you can see here, you know, all these lines kind of look confusing, but it's really not. If you look at this green line, this is the mean, right? So, or the average. And these yellow lines or off-white lines, what these lines are the ATR basically split into thirds, right? So you can see on this gray, in this gray box here, if we go directly down, the ATR was about, we'll just say 25 cents for simple math. So your mean, you can see the little green line behind there, $3.63. So then if we go up, you know, approximately 25 cents, that's going to be your first Keltner line. And then if you go up another 25 cents, approximately, that's going to be your next Keltner line, and so forth until you get to three movements away, or some like to say 3 standard deviations away from the mean. Typically, and the reason why this is set up is typically stocks like to come back to the mean 2 to 3 standard deviations away from the mean, right? So you can see here, you know, if we go back, it was at $2.62. It came up and went up about 2 standard deviations or 2 ATRs away, and then it kind of started going sideways towards that mean, right? Then it popped back up. It went up back up to 3 standard deviations, and it kind of started regressing back towards the mean. Recently, you can see here. So in January, if you were kind of using that as your entry and your exit point, you could have bought once again at 364, but instead of selling it, if it closed below the mean at 408 and only made 40 cents, you could have bought it here at 364 and then just sold it when it got 3 standard deviations away. And you would have sold it at around, let's just say if you're selling it at the close, you would have sold it at 495. So instead of you making 40 cents, right, you could have essentially doubled your investment and made $1 per share instead of 40 cents per share. So you could have done that. And now it's regressed back towards the mean. And you can see that it's right near that mean now. So you could just wait and buy it once it closes back above that mean, and then sell it once it gets to 3 standard deviations or 2 standard deviations away from that mean. So that's kind of a quick and dirty overview of RIGL Pharmaceuticals. If you got any questions, comments, concerns, hit your boy up. Like, subscribe. This your boy Black Market. Talk with you guys later. Bye.